Hey, what is going on, guys? I hope you guys are all well. Hopefully, you guys have been trading safe. It's been a while since I've gotten you a video, months in fact. So, old channel was taken down, so we're going to start a new one. It's been up and kind of like pseudo running. There's some old videos on there, so you guys can kind of see what I'm all about. But we are going to talk about Bitcoin today. I'll have to do a separate one on Ethereum and XRP. This is going to be one of those videos where we got a lot to cover. There's a lot you guys have missed. I watched some videos leading up to this kind of price action. I'll be honest with you. Most of these guys are, I wouldn't say they're trash. I'm just saying, they miss a lot of details. There's a lot that's missing from them. So let's talk about some magic internet money, guys. So if you're new to the channel, like, subscribe, dude. Give me like 5 minutes. I'll show you guys how to do this super quick and easy. And if you like that, I promise if you stick around for the end of the video, I call it TA porn, technical analysis porn. I will show you guys how this whole move unfolded and the importance coming up of certain levels. Now, I do have a chart that I'm going to go over in that section with you guys. That's pretty important. And I'll show that to you on Twitter. There's going to be two of them. So I have this one pinned right here. This is one really, really key chart. This is from the 4th where I'm detailing the 5-0 that led to our current top, okay? Basically saying that we would challenge D if we lose about 48K, which is $43,000 in this. You can see that right here. All right, so you can see that we did end up doing that over time. And that 58 and 59K was the most important levels. Now, there's a lot to remember. And remember, I said if we lose D, this is where we are going to challenge next. This is the important low to defend at 28,829. We hit 29,800. These are the old ranges. We'll cover all that too. So if you guys are new to this channel, I promise if you stick around, you are going to love it. Let's get into the immediate technical analysis. And then the last thing we will go over is this is something I published on Twitter finally. I don't normally publish these types of charts for you guys. I keep them to myself as a solo trader. I'm not saying that, that's good or bad. It's just one of those things where, everybody's got their own edge. And I definitely have mine. So let me pull that up for you real quick here, and it's right here. All right, so we will go over this bad boy. This is something you won't see on any channel. You won't see it on any of the YouTubers, the big ones that are doing harmonics either, because they miss this. All right, so we will go over that, the validity of it, and the targets. And yeah, let's just jump right in. The TA right now is really simple, guys. So when in doubt, zoom it out. Let's take a look at what we got on like a weekly and a monthly. Okay. So one thing I do want to point out is there was a post recently I made about the quarterly open, because that is our law resistance right here. This is an old folder, and the reason this is important is when we were breaking down, this was the area to reclaim if we were going to remain bullish, obviously filling shorts into this region and down. And it did dump really, really nicely at the 618 of our fib time from the distribution of this move. So we have that, and then we have other fib times we're going to talk about as well. So that is the way to go about it, okay? So for the local action, we're going to stick to a monthly here just because that's what's important. We got nothing there. Let's look at a weekly. We have a nice weekly level, okay? So we have our weekly here, and then if we come down to like a daily, you'll notice that it coincides with these lows, which is really nice. Now we have taken the lows here, and we have swung fail on the daily. You'll notice this is your daily swing failure pattern right here. Here's your low. Closed right back above it. So now this becomes important support. We're going to put our box there, zoom into the low time frames, and you can see that is where we smack dab right into. This is a box I gave on the 9th. It's on my Twitter account. It's in the group. So this was the support. This is about a 4.7% bounce straight into the weekly point of control. So yeah, if you guys aren't new to the channel and you guys learned to trade from me, you guys are probably using time-based and structure-based ranges. Hopefully you guys are still sticking that out. I know a lot of the guys that I bullshit with every day in a private group because we just want to hang out, they still use them and they love them. So in order to get this tool, this is the fixed range tool, by the way. You will need to have a TradingView account. If you are so kind and you want to learn how to do this stuff, you can use my referral link for TradingView down below. Create your account. And then they just make it so that it's free for me to use. I don't actually get any kickbacks or anything. It's just one of those things where they're like, hey, thanks for sponsoring our product. Here's a free account. All right. And TradingView is kind of the standard for charting across the space. So I don't really think you'll go wrong with just getting a TradingView account. Now, the entry level is free. To use that tool, you do have to upgrade to their first pro price. And it also gets you the object tree here. So you know, I highly recommend that so you can stay organized. So this is the support to hold, right? I mean, it's pretty obvious. Now, where do we need to get above? Well, that's a great question. When would we have a change of behavior? So this was something I gave you guys when it happened. This was a level that we came into right here. And this was a fib time as well. Perfect fib time. Everybody said it was the Elon tweet. A lot of people just don't understand technical analysis. They don't understand distribution or accumulation or really any of that for that matter. So they missed this. But this was your swing failure pattern of the highs, right? And so we had a really nice double cipher that led to a triangle. Something I figured out right around this area that we were going to do that, posted it on Twitter, said I'd be so happy if it just did this and gave us this triangle, and it did. And then we've just been trading the range ever since because it's pretty much sideways. But yeah, so this was your range up top, okay? So this was your daily level at the highs, and this was your swing failure pattern right here, and it gives you another box. So you're basically trading between these two boxes, buying and selling. Really, really simple. And then you can see right here at about 37,500 here in the middle of the range would be the key level to get above. You guys don't even need a volume profile for this. You can do this by just looking at it, all right? So this is going to be where you need to regain. This is what you want to hold, and then you need to get past this. Now let's bring volume profile into it, as again, guys, we do keep our ranges handy. So we have our February breakout range, which is all the way up here at about 50K. Really important area for us to get back above. And then if you guys have been following me since last year when I had my old channel, this was our December range right here coming into this region. And as you can see, we came down to the December range, bounce, and we've just been cycling it, okay? But in order to get out of this December range, you do need to get above this level. Now, why is this level so important? It's not just a functional and it's not just a range that's built on, you know, the structure here, where we're just doing it by eyeball. Like, okay, this is where market structure changed. This was our breakout. We move into this new range. We lose the range. We stop recording this range as it's falling back to a prior range. Okay, so most people are going to try to incorporate all of this price action into one range, which is totally acceptable. The one thing you'll notice is this range pretty much begins at the beginning of the year. So I'm just going to default to my yearly range on this one. I don't see the need to have a separate structural range for this just because the time on it is pretty much spot on. You can see that's about when we started this old range and we're moving in. So it's going to catch it by about 5 days, but it's not going to make that much of a difference. But what I want to highlight is, if you recall from earlier, we did have this range right here where we were saying we got to get above this little box. You probably can't see the box very well, so let me zoom in for you. We need to get above 39,665, which is the median of our box here that we drew for resistance at the top of the range. So if we can do that, we have found our way back into our yearly range, which if we incorporate this data right here outside of the volume profile, you could call this its own B range by itself. All right, so you would be looking at something like this. And so you would be looking from point of control to point of control here. And I say POC even though the POC is up here because these are pretty high, these are high volume nodes essentially. We're just looking to see where we would end up. And so then without even using fibs or anything like that, we could probably say we'll probably end up somewhere in this region. And we can, you know, then take a look and see if that matches up with any of our TA. And what you will notice right away is it does line up with some dailies that we settled up on right into this area here, which is an important area, which we're going to get into after this in the TA porn session, where it's going to be me reviewing a lot of charts that I've already shown you guys on Twitter. But if you don't follow me on Twitter, you haven't seen them. So it's time to talk about them and give you guys why they're important. So as far as this goes, need to hold this level, need to reclaim about 37,399. That is going to also end up being about your point of control of the entire profile here of this little miniature structure we've got. You can see that's the TPO point of control and the profile POC. So we do need to see this level held as support, and we can move up to that $39,665 top of the range. And so that's where that comes in. All right. So very, very simple here, guys. That TA is not hard. Now, I did take a long off of this. The weekly point of control on it was coming in really, really nicely in the region that I took my first profit. If you guys follow me on TikTok, you saw that I gave that trade and told you where I was taking my profits, and I've left about 1/3 of the trade open, and we go from there. So if we go to our weekly range here, what you will notice is that there is our POC. So that would be TP1, and then you could start pulling up like the previous day, because our previous day range here is actually coming in above it, right? So then we could say, well, if we can get in this previous day range, would I have anything to say I'm going back to retest this right here at the previous day value area high, right? And it happens to be our level we need to get above and hold just from eyeballing the range. So there is some confluence for this to be an area of interest going forward. But again, don't get ahead of yourselves, as this could just come down here back into the support, and we don't want to see that daily swing failure pattern loss, because then this looks like the place where the bulls did settle up on their last daily candle, where they said, okay, we're making our stand here. We've swung failed the lows. We've got these big wicks. We get our big move up. If price comes back to this level and we lose it on a daily closing basis, that would not be bullish. It would not be something I'd want to be a part of longing. I would really want to wait and see a range reclaim before I had any interest in getting involved in that, all right? So that said, let's talk shop on the macro on this. I'm going to try to keep this pretty short. And yeah, so let's look at the targets if we get back into this range here real quick. That's what we'll start with on the macro. That way you guys can at least have a plan for upside and downside, right? And we'll go from there, okay? So obviously I like looking at ranges. That's just what I do. We have our current June range, right? You can see that's coinciding quite nicely with the median of our current range. And then we have our May range, okay? In the May range, there was quite a bit of distribution. The POC is way up there, and you can see that it was just a lot of selling, whole lot of selling. So we're still working on getting back inside this May range. It kind of coincides with where we need to get above and close and hold. And if we get back into it, I mean, the median of the range is about 48K. So I don't think that the monthly range is going to give us a whole lot of importance here. Yeah, I mean, I don't think time-based ranges on this one are going to be all that great. I do think the yearly is a good one to look at right now, and I think that just using your overall structural ranges is going to be great. So if we are to get back into this, I'm looking at this from a yearly standpoint, and then I'm also going to be looking at it from a Fibonacci and a harmonic standpoint. As you guys know, that's something I do quite well. So this is the harmonic that I was looking for on the drop. I don't mean to toot my own horn, but pretty much called this drop really, really nicely. Was looking for that 28K region, said, okay, if we get a bat off of this, B leg being here, C leg here, D leg would bring us down into that 32K region. Now, we did also have the option for a deep crab and a shark, okay? So that put this box a lot larger, and so this is where you began to size in, which we obviously hit down to 29,800, and this I had it going down to right around 29K even. I was looking at this old miniature range here just beneath this range. As I said, I keep all of them in a folder, so it came in handy, and as you guys know, that's exactly how things played out. So it worked out really, really well. I don't want to say anything like exactly as predicted, because it's just asinine. I don't get into that. I don't want to play with that game. TA is probabilities, okay? So we know where we're right and we're wrong. If you guys forgot the levels I gave you for the upside here, 39,665, 33,386.50 is the level to hold on a daily closure. And yeah. All right, so moving into that, guys, if we can get back into this range, I am looking at this as an overall shark, okay? So I do have some high time frame harmonics. And so we were looking at this as a potential bat or a potential deep crab. I do think the shark is best here. The reason I think that, one, it starts the X point here, which was, if we go off time-based ranges, let's switch to log scale for just a second, all right? If we go to time-based ranges, the ranges was long, a little bit shorter, but still really long. We have a range here. Obviously, it's not as long as these two. The ranges are getting shorter, and then right here, coming into our macro fib time, if you guys recall that 414 on January, I believe it was 8th, we retraced 30% and we formed a longer range for the first time since all the way back in our original accumulation range at resistance and the breakout, okay? So that's when things started to change. That's a change of behavior for Bitcoin, and I was actually covering this before the channel went down, and what I said was, hey, this is a change of behavior. What we have to see here is this accumulation for higher highs, and I said I don't think this is the high. We were looking for the 1618, which was something that I was pointing out to you guys well in advance. This is actually February 19th. We were still talking about it looking to get up to that region because that would be one of the bigger targets, right? And that is coming in at 63,511 up to 66,678. I think we hit 64,990. All right, so yeah, I mean, this was a really obvious move here. You had a couple different things that did happen in this region. So before we get into that, what I will talk to you about is the target of the shark. So when you get a shark like this, you get the expansion level to 113% up to 161.8% for C. The B leg expansion level is not as important. Okay, for a bat, you need to be between 382 and 0.5. This one right here, it's completely inconsequential. We're only looking for the expansion level at the highs. Okay, so it definitely did reach that expansion level at 141% retrace, so a 1414 essentially, well within the parameters, and then down on the shark looking for an 886 to a 113% expansion, or well, retrace of X here. So it could be shorter than X, it could also be just past X, all right? As long as the expansion level is a 1618 up to a 2.24 as the levels you'd be looking for, that is your completion zone. So that just went along with our old range. If you recall, we were just talking about it, that February range. So we did have, our December range, we did have some confluence for this trade. It was something that we would be looking for. All right, so the B leg becomes the target and then the 50%. So our first target on this structure is going to be your B leg, which I do like because if you recall from my tweet right here, it's pinned on my profile, and that is going to be where we took our stand on the monthly val here on that 5.0, that 43K monthly val, when we completed this much larger shark into a 5.0 continuation, okay? And generally when you get this, these are very powerful patterns. This is where traders really took a stand, and then you can see you had traders really take a stand here with these single prints, and that becomes an area that, okay, we really need to hold that 47, 48K region, because if we don't, we'll probably challenge D. If we lose D, we did talk about it, we will come down and we will challenge the next leg and the next low at 28K, which is what happened ultimately over time. Now, spotting the top on this could have been done a couple different ways. You did have this shark. You wouldn't have known about this shark, though, right away. A lot of people were trading this. If you were looking at it from a harmonic perspective, it became well known that this could be a cipher, I think is what everybody was looking for. I'm gonna have to change it up here in just a second because X needs to be right here. Right, so you had the 1272 expansion for C, and then a 786 and 1272 confluence for D. You got to move right back into the point of control, the law of resistance, if you guys recall, which we got at the time from our quarterly close, our monthly POC, and we had a nice daily swing failure pattern there, right there. This was a swing failure pattern that was never recovered. You guys know how much I like those and like to use them. We never recovered this level on a closing basis or closed above it, and we think of 59,024. So we got close. We got within $50, but a close below is a close below, and down she goes. So this was the bull trap, so to speak, the last bull trap before down, which a lot of people then looked at this as an ABC. This was initially your ABC coming into this region. It did hit on the 618 fib time really nicely, but I did put on Twitter that it's okay that this fails because I do think we head lower from here. And then I made a series of tweets basically saying that Bitcoin would trade at the same price as a Model 3 entry-level base Model 3 Tesla after all the discounts, which was right at the time about 30K. So I think it was like 33K, but you know, close enough is close enough. I was just kind of having fun with you guys on that one. But yeah, so a lot of people traded it like that. But in reality, what you were looking at here was you had a where's my doomsday folder where I keep all the goodies at, right? You guys might remember that if you've been following me, the doomsday folder. You had a bearish 3 drives pattern. So we chose this low because why? Well, this was the first range that was a change of behavior. This was a very important pivot in the market right here. So you got your retrace into a 1272, retrace into a 1272, and that was all capped off by, believe it or not, a butterfly harmonic, right? Now, if you weren't watching the butterfly harmonic, what you could have done is you could have been watching this as a Gartley, okay? There were a lot of people that were looking for this to be a 5.0, a shark, because this was a shark into this region. This is a valid shark right here. So we did get the short. Everybody was looking for that 50%. I was one of the few that was not. I was looking for this, and not only did we get this, we got it within 1 4-hour candle variation of the low for an exact 1-to-1 in fib time. Okay, let me work up fib time real quick here on this one. And as we work up the fib time, you can see the 1-to-1 is pretty much coinciding with the high, which is the distribution of this bullish Gartley. Okay, so very, very nice. All right, very nice. And targets were hit, time was hit, and down she goes after the 3 drives. Okay, so I did a lot of trolling in this time. It was a really, really easy pattern to trade, right? So back to the shark that we were discussing. What is this? Oh, that's our original 5-0. And yeah, I think we're done with this guy here. And if we go to back to the shark, we then work up our targets on this as the B leg, but ultimately we are looking for the 50% at some point, which to me would be on the bullish side of things. But you can see this gives us a really nice window here, and I would almost extend this window up to the daily level here because there's a weekly at about 45.2. But just for posterity here, guys, let's just call it the 50%. And this becomes your next area if you were wanting to long. So obviously we still got to get through 39 at 665 here, get back into this yearly range. But this would be the next area of interest up to this weekly level here, in my opinion. And you can see how nice that is on the current price action. So I would say this is your box here between 43,000, 1750, and 45,239.50. It's a pretty wide box, to be upfront with you guys, and I don't mean that to be vague. I'm just letting you guys know that this could actually come all the way through this box. Realistically, nobody truly knows. We have a pretty good idea. It could come up through this box and into the 618 here and then down. Or it could come back to here and then bounce around and make higher lows and then reclaim this. And if this level got reclaimed and was held as support, this 43K level realistically, I would look for that move potentially to come all the way back up and then test this right here. Okay, and that would be your POC, and that would make sense. And we've seen that before in Bitcoin's price. So we are off in the weeds here, but let's just talk about it. Last time we had a massive move like this. Okay, so this was our massive distribution top right here. Let's go to our fixed range. Let's just pull it really quick, and let's take a real fast look at our POC. And all of those lower highs were directly into the point of control. Hopium squashed. Hopium squashed, right? So this one right here got a lot of people to Rona dump. Everybody called manipulation, but if they were just watching the charts here, the night before this when I was working in the old group, I literally said we should just be blindly short. So however you want to look at that, it did not look good, guys, because you have a series of lower highs, you make your lower low, another lower high, and then sell off, okay? And so as we come up to here, this is a really similar situation where you've got this structure, again, head and shoulders, boom, 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 down, right? And then instead of coming back to the, to back test it and then sell off further, you made the lower high like you did here, right? You make that lower high, but then you made a higher low, lower high, higher low, so you're compressing, triangle, and then you get to move up. This was completely opposite. You made the lower low. This is technically a higher low on the schedule of things, but you made a lower low, and then instead of holding this low, that was your cue to get out, and down it goes. So that's what's going to be interesting here to watch. Can this form the higher low, right? Looking for that higher low, something like this. Can it form this low, which technically this is a lower low? Can it form a higher low in comparison to this section of price where we could call it a floor? Can that hold us up? Because if it can't, you guys know that I have trolled on Twitter a little bit. I said, everybody thinks that 24K is going to be the bottom. There's no reason for it to stop there. There's no reason realistically it wouldn't go to at least 20K, and we'll get into that. So let's talk about the realistic targets of Bitcoin if this is a much larger distribution. I do expect us to put in a bottom and then at least come back and start backtesting those POCs of the old range. And it takes time, guys. This took a long time, September all the way to March, right? That took 7 months for this lower high price action to play out and then get final capitulation. Just like when Bitcoin topped out at 20K and then came down to 3K. These things do take time. I'm not expecting it to just flash crash all the way down there. I think that it's going to put in some complicated type of structure. There's going to be a lot of trades to be taken, but overall, if we're still making lower highs and we can't get past la resistance that I showed you earlier, Bitcoin is destined for either sideways choppy action or lower prices, and I would think the pressure would be on for lower prices at that point. So that said, let's dive into the chart that I showed you at the beginning, that deep crab and log scale. All right, guys, so this is the pattern everybody missed, if you want my personal opinion. Mainly, the reason they missed it, okay? So you're looking at a deep crab, and I spotted this as a structure because I was looking at this for a shark, actually, initially. If you followed me that long ago, the shark did play out, except it just went right through. And so what you're looking at here is an X, A, B, C, D, right? And ironically, this was an exact one-to-one if you were to do like a fib retracement. Well, it was 886, pretty close. So I usually give those one-to-ones as a little bit of room to run there. But this is what I did want to show you. C leg here, hit the point of control really nicely. So when I was emphasizing point of controls earlier and I was showing you guys ranges and I said, hey, the price came back up and then we hit the POC here, hit it again and then rejected. Look where we ended up, the point of control of our move up, okay? So these things do matter, they are important, and it gives you a really good idea of where price is going to go. There was another really important point of control here on the yearly, and I'll just show you guys on the 12-month. This is something I used to talk about a lot too, was this level right here. This is your yearly level, okay? It's your annual level. There are very few that are less important, and it will come back into play here. And you had an annual level just beneath it, okay? So these are your two annual levels, and they are important. They're very important, okay? So these are where traders have really put in the base and the work on this chart, because if we go to a monthly now, take a look, looks really cool, looks really nice, and you can see that we now have la resistance up here. That is your new level to get above, okay? So just from a high time frame, that's where we're at. Now, I had this drawn up for you. The reason it's drawn up like this is to emphasize that you would have never seen this deep crab coming if you were just using this tool, because the tool itself does not adjust for log scale, okay? So this does not adjust for log scale. What you had here was you did get the 618 retrace, you did get a valid C retrace, and then the crab did complete. The issue is the expansions do not change because they only stay in linear. The tool itself is flawed. So here is the deep crab. I've kept on the two annual levels and la resistance, which we covered earlier, right? This is very nice. You have the 886 for your B leg, okay? C leg comes down to an 886 here, and then you have almost an exact 1618 expansion into the 2.24 resistance. Let's take a look at Scott Carney's website, and it'll actually go over this pattern. This is all done by hand, basically just calculating these fib levels and expansions in log scale using logarithmic Fibonacci instead of linear, okay? So that's what the key was on this, and it does play out just very nicely. So this is his website. It's harmonictrader.com. Feel free to use it. He's got a lot of really good resources on there. You can find his books on there, and I think he does a few other things. So yeah, you'll see exactly what we're looking for. B886 up to an 886 for a retrace. I think we were 885. This was 0.81. And then you're looking for a 1618. We hit 1648, almost got to the 166. And we're looking for between a 2.0 and 3.618 expansion. We hit a 2.24, which is really great. That's actually a pretty common fib level to use when considering expansions, on deep expansions especially. So really great pattern here. This is a bearish pattern. It is a reversal pattern. So from here, where do we go? This is something I did post on Twitter. Here are the TPs. You are operating in log scale here. So if we go ahead and turn on our fibs, you'll notice that in log scale, we have hit the 0.236 and 2.5 exactly in log, okay? Lining up really, really nicely with our range lower closures, kind of, completing that other shark and bat pattern we were talking about on the lower time frames there, like the daily. This is a weekly chart. You could actually see this on the monthly chart, right? But realistically, TP2, if this is to continue to play out, because Bitcoin is a very bullish asset, and we live in times where bullish markets can underperform when considering bearish patterns. Okay, so you do need to keep that in mind. But should we lose structure, the 20K region is your next target, and you do have an annual pivot down there. So we'll go ahead and turn that on. And you can see that the annual pivot will be coming in right here at the 382. So this will be your next target. Okay, so these will be areas where you want to be careful. Now realistically, we just talked about the annual levels here, and the 50% retrace is right there as well for your log scale. So do remember the 50% is there, but this is your annual level, and this is your annual level. If you're looking at things from a structure standpoint, X is a target for the deep crab. You want to see it retrace to X because that's where your structural beginning was. But then also so is B. B becomes the next target, and this is where I start to consider buy it all, anywhere from basically 20K down to 13,880. That's a huge range, guys. Huge range. Okay, so you got to bear that in mind. But should we get down to this level, it'd be perfectly acceptable. It'd be a 50% log scale retrace, and it would be the B target and annual level of this pattern. So that is where I would be really interested in getting heavy into it. From a structure standpoint, that's where the most support is in this region, this little area here. I do believe I have, this is my first TP. This would be TP2 or our next buying opportunity. And I'm talking spot here, guys. I'm not trying to leverage trade and catch the bottom of this. And then you do have this here, and I have it buy it all. This is the level you want. Basically working off this daily level here, all the way up to the B leg right here, 50% retrace, however you want to look at it. I would be looking to get involved in Bitcoin all the way down into this region. That would be my goal. All right, so that is how I see this pattern. That is what's going on. Anything below, you guys know that typically when Bitcoin breaks out, the 50% retrace level is something it never goes back below once you close the second weekly claim of that above it, and that level for this was $11,397. So losing 11.4 would be one of those things where I would look at that, and that would be extremely bearish in my opinion, very bearish. So these are all well and good. This isn't meant to be FUD because we should be bouncing from here, because again, we had our sell-off. People get very bearish here. We should be back testing some support or a point of control somewhere, and we've identified those. We should be looking up to that $43,000 to $45,000 level next if we can get above 39,665. If we cannot, we have to look down to support. One thing to consider is something like this that did happen with Bitcoin after it sold off the first time, after it put in its massive top. It did, get everybody bullish here. It made that lower low, and then massive short squeeze off the golden pocket, because we did come up just shy of the golden pocket here, and we did come up just shy of the golden pocket here. All right, so do keep that in mind. That can happen. So you need to take this level to level. If you're looking at shorting, you need to make sure you're shorting from the highs of the range, not the lows. Breakout shorting on Bitcoin is not always the best idea, especially if you don't have any idea where you're going to be taking profit. For me, setting up shorts much higher, holding those shorts, taking profits incrementally until you are proven wrong is the way to go. Otherwise, I'm just trading the ranges, and then as volatility is occurring, if I'm not on the right side of the volatility from the highs of the range, I just don't get involved and I wait for the next opportunity. All right, so this has been a really long video, a really long introduction back into making videos for you guys. I do need to do Ethereum and XRP. You guys know that I pretty much have been calling those really well as alongside of Bitcoin, so I guess I'll do that too. I've got time today, and I'm in the mood. So I hope you guys enjoyed this video. Leave me a like, comment, subscribe if you're new. Helps the channel, guys. Let's get it back to where it belongs. And I'll try not to disappoint you guys with my analysis. I think it's going to be analysis that you're not going to find anywhere. I think it's unique. And I continue to prove myself in that department. So thanks again, guys, and I will catch you in the next one.